banking, finance, and insolvency disputes. A simple example would be a loan default involving a borrower and guarantors. There may be an arbitration clause in the document. Fine. But the question is not whether arbitration exists. The question is whether arbitration alone is enough. So, to my mind, the real issue is not ADR versus litigation as a slogan. The real issue is whether chosen process is fair, effective, and suited to the dispute at hand. In the right case, ADR can be extremely valuable. And I have seen arbitration working effectively in right cases. I've seen mediation working effectively in right cases. But in the wrong case, it may simply add just another layer. And that another layer we have seen with RERA also. We have seen with commercial courts also. We have seen it in IBC also with NCLT as well. Just to give you an example, in Maharashtra, before RERA courts, if you file any case, before the case actually begins, they have added one more layer by CREDI. That CREDI, the institution, would try to resolve the dispute through conciliation, and that conciliation process itself is taking 1 year's time. So the intention that legislators had in their mind in the way back in 2016-17 when RERA came into picture, that that intention is somewhere defeated, I feel. So coming back to the square, in banking, finance, insolvency, guarantee related disputes, how ADR is important? Yes, definitely it is important. And it plays an important role. But we should not overclaim ADR to be the only effective method of working, especially when we have had the taste of unilateral appointments by financial institutions. We have had the tastes of these cases being dragged up till the Supreme Court. So, considering this, I'll again say, in the right case, ADR can be extremely valuable, and in the wrong case, it may simply add another layer and delay justice. So, for the opening remarks, I'll stop it here, and I look forward to discussion ahead. Thank you. Thank you. Over to you, Asad.
Thank you, Mr. Gandhi. Your words certainly give us a lot to ponder over with your statement about ADR having specific use cases. So, with that, we now move on to our next distinguished speaker, who will further enrich today's discussion. Dr. Misha Kumar, FCIArb, is an independent and impaneled arbitrator, accredited mediator, and an independent counsel with a rare interdisciplinary foundation in medicine, management, and law. She acts in domestic and international commercial arbitrations with particular expertise in healthcare, biomedical, infrastructure, regulatory, and public sector disputes. She is a fellow of the Chartered Institute of Arbitrators, Oxford, and a member of YMG CIR. Dr. Misha is impaneled as an arbitrator with IAMC Hyderabad and the Beihai International Arbitration Center, and has recently been impaneled as a specialist mediator with the Singapore International Mediation Center. She is also a frequent speaker and panelist on arbitration, mediation, and professional development, and has represented India at the United Nations Forum on Business and Human Rights in Geneva. We are delighted to have Dr. Misha with us today and look forward to her valuable insights. With that, Dr. Misha, I invite you to offer your opening remarks.
Thank you. Thank you so much for that very generous introduction. I hope I'm audible.
Yes.
So, good morning to the moderator, my fellow panelists, and everyone joining us today. I think Mr. Rishabh has covered a lot of ground, and I'd like to keep my opening remarks short, in light of the fact that we'll probably be able to go more in depth, as Mr. Gandhi said, during our run sheets. So, banking and financial disputes today sit at the intersection of contract law, insolvency law, regulatory frameworks, and the increasingly technology driven financial transactions, as we just heard. Now, because of this complexity, dispute resolution in this sector is it cannot be viewed any longer as a simple choice between litigation and arbitration. Earlier, we used to call it the temperature test. Back in law school, we would study how there are certain disputes that are arbitrable, Booz Allen and Vidyadrolia, as we've evolved with time. Some that can be mediated, some that cannot be. That is also evolving. Now we see criminal matters getting mediated. Thank you to the Supreme Court, and of course there is a line where offenses against the society cannot be mediated, and then you have litigation. So there are certain disputes where, let's say, rights under writ jurisdiction are involved, that they can only be arbitrated. But the category of disputes that we are discussing here at this webinar today are way more complex than that, which includes a lot of carve outs on what disputes can remain arbitrable within those contracts. Historically, of course, recovery disputes in banking specifically were largely addressed through court driven mechanisms like the civil courts, DRT proceedings, statutory enforcement frameworks like SURFACI, attachment, so on and so forth. Now, these mechanisms still remain important because they provide the lenders with certain coercive powers for recovery and enforcement of security interests. However, financial transactions themselves have evolved significantly. As Mr. Gandhi was talking about how loans are so easily available, and the person who's receiving that loan may not be aware of even the contract or what they're signing up for, really, because the terms involved are standard form contracts here. So modern banking disputes are now they frequently now involve complex financial structures, syndicated lending arrangements, shareholder agreements, cross-border investment frameworks, and a regulatory oversight which everybody may not be well aware of. In this environment, ADR mechanisms, particularly arbitration and mediation, have increasingly become an important part of the dispute resolution architecture, offering confidentiality, commercial expertise, and enforceability across jurisdictions. That said, ADR in banking and finance operates within clear structural limits. Many disputes from loan defaults, guarantees, or shareholder financing arrangements remain fundamentally contractual and are therefore well suited for arbitration, as they involve rights in personam between the commercial parties. So, those privy to the contract will be parties. At the same time, certain disputes inevitably move into the realm of a public or a collective process. For example, under the NCLT, the IBC proceedings that we are seeing, insolvency proceedings, these have transformed what may begin as a bilateral dispute into a collective process affecting all creditors and stakeholders. For example, JP, we see the home buyers dispute. So, in that context, arbitration cannot substitute for a statutory framework. But what we are witnessing today is the emergence of a multi layered dispute resolution ecosystem. Within the same transaction, we see different fora being used effectively and efficiently to resolve different sets of the disputes. So that's what makes this set of disputes that we're discussing today quite complex. And it is advisable to have legal counsels on the same track so that the parties are well aligned. So, what we therefore are witnessing today is this multi layer structure, a financial dispute which may begin with restructuring discussions or negotiated settlements like OTS, may move into an arbitration for contractual disputes, and in some cases ultimately enter formal insolvency proceedings where the collective creditor rights are involved. In the formal institution, under the CIRP process, the committee of creditors, right? At the same time, we are seeing the rapid growth of digital lending and fintech platforms, which has introduced a whole new dimension of ODR mechanisms. We see so many bodies, COD, SAMA, so many. We are seeing a mushrooming of these ODR platforms in India, which is so beautiful because one like Presolve, I've met Namrata, and they're doing so well at the ADR ODR International now. And these are designed to address much more high volume, technology enabled financial disputes. While these systems promise speed and efficiency, they also raise important questions about procedural fairness and borrower protection. Another issue that frequently determines the trajectory of financial disputes is something that appears deceptively simple, is the drafting of the clause themselves. So, in practice, many financial disputes spend significant time on jurisdictional questions, seat, arbitrability, conflicting clauses across financing documents before the merits are even reached. So, we waste time in court, um, creating what we call, in the sense, satellite litigation before getting to the meat of the matter. Ultimately, the evolution that we are witnessing in banking and financial dispute resolution is not the triumph of one forum over another. I'm going to quote Justice Tejas Karya here recently at a seminar. He said that ADR is no longer an alternative dispute resolution mechanism, but a parallel one. It, it, it supports the courts, and courts are always there, of course, to support our tribunals. So rather, we are moving towards a multi door dispute resolution ecosystem where courts, arbitration, mediation, restructuring frameworks, and digital dispute platforms all have a very distinct and an interconnected role. This is one ecosystem. It's like how students of law quickly choose a specialization nowadays, but actually the entire body of law is connected. It's one law. The Indian law or a jurisdictional law is one law. So one may specialize in a particular law, but uh, at the same time, one cannot dissociate themselves. Let's say a fraudulent section of offenses is involved in a financial transaction involving insolvency. So criminal proceedings will, continue parallelly and will have to go to criminal courts through the sessions courts. Therefore, we cannot, in the same way, we cannot separate out these different fora which are meant for different kinds of disputes. For practitioners, lenders, and policymakers alike, the real challenge is not choosing a single mechanism, but designing dispute resolution pathways that preserve the commercial value and protect the legal rights. Because if we want India to grow, if we want India to have the GDP that we ought to, we need to have these mechanisms well in place way before it is dispute time. Because when the dispute arises and the arbitration or the dispute resolution clauses have to come into motion, uh, or the dispute resolution clauses that call for litigation, it is usually not the time to, there will be no time to amend these clauses. So it is at the time, at peace time, that you need to make sure that the clauses are so well drafted, and that shows the foreseeability of the draftsman. And that, I believe, is precisely what makes today's discussion so important. And I look forward to hearing the perspectives of my fellow panelists and to a very stimulating discussion. Thank you. I'll close my opening remarks for now.
Thank you, Dr. Misha. Building on these valuable insights, we now invite our next speaker, Mr. Himanshu Shembekar, to take the session forward. Mr. Himanshu Shembekar is an accomplished arguing counsel and an independent legal practitioner, distinguished for his expertise across a wide spectrum of legal domains. including arbitration, insolvency, consumer, insurance, civil, and environmental law. Over the course of his practice, he has successfully represented clients in complex and high-stakes matters involving substantial questions of law before leading judicial and quasi-judicial forums such as the Supreme Court of India, various high courts, arbitral tribunals, the NCLAT, the NCDRC, as well as various district courts across Delhi NCR. His appearance reflects both depth of legal acumen and a strong command over advocacy across diverse forums. In addition to his legal litigation practice, he actively contributes to the evolving legal landscape through his writing. He regularly authors articles and blogs on arbitration and insolvency law, offering insightful perspectives on the contemporary developments in these fields. We are pleased to have Mr. Himanshu with us today as our associate partner for this session and look forward to his valuable insights. Mr. Himanshu, may I now invite you to share your opening remarks?
Thank you so much, Asad. Uh, Good morning to everyone and to my fellow panelists and to everyone who is attending this webinar. It's a pleasure to be part of this and to share my opinion or knowledge on that on a subject that is increasingly shaping what financial dispute resolution stands today, that is ADR in banking and finance. So, looking at the topics that we have in hand, which is loan defaults, guarantees, insolvency, and fintech disputes. I believe through my lens, I will be sharing how these issues actually play out in practice in front of me, how these have actually happened, and what I believe is the right mechanism. I think Dr. Misha Kumar and Mr. Rishabh Gandhi have actually covered a lot of practical insights of it. And when presenting, I might be sounding like a person who is more like an ADR player and who believes a lot in mediation and arbitration enthusiast in that way. I really believe at the very core of the topic that we are discussing that every financial dispute reflects a breakdown of commercial confidence. Now, what is really at stake is not merely the legal rights of the parties or the parties in dispute, but also involves time, value, and business continuity. And therefore, the question not only remains about which party is correct in their arguments, but how efficiently the disputes are actually resolved between the parties. Time becomes a big cause of concern, I believe, in these kind of matters. Now, if we take for loan defaults, for example, now in theories, the remedies are well established, ranging from contractual enforcements, sometimes there is invocation of security or collaterals, now to exercising the statutory mechanisms under Sarfazi Act and appear starting proceedings before the DRT. Now, I believe that these delays in these though these are there in practice, but looking at the current situation and how DRTs are functioning or how courts are functioning in general, they often result in erosion of the asset value or the main purpose for which these disputes are begun. So what we are increasingly also seeing today is that financial agreements, and especially which I have seen in NBFCs, they are being structured to anticipate this. So most loan agreements now incorporate arbitration clauses at the outset. So when a default occurs, parties are not left navigating and looking at multiple forums on which forum to be going ahead with. Instead, they already have a pre-agreed mechanism for resolution that is going through arbitration. And the next step is to just appoint an arbitrator and going ahead with the proceedings. Now, going ahead, rather than immediately resorting to all these fragmented recovery proceedings, parties are able to invoke arbitration and engage in parallel discussions at the very same time. Now, I have also, I being a advocate, I still ask parties whether there is scope of negotiations, whether the parties can engage in proper structural discussions, before going ahead with the any kind of arbitration or litigation proceedings altogether. As we are aware that these are costs are incurred, there are possibilities that time may be taken for the matters to be disposed on and before the understanding how the party shall be affected. So, and ultimately that's what helps in preserving the asset value. Now, if I may also just step back for a moment, the larger point I'm trying to make this that the ADR allows parties to move towards resolution in a far more efficient and commercially sensible manner. Now, a similar nuisance is also seen in guarantee disputes. Now, being also seen construction matters and all. We have seen that bank guarantees are to be honored by parties, except when there are situations where parties can actually prove that there is element of fraud or other conditions which can actually show that the bank guarantee should not be allowed to be enforced. Now, these kind of disputes are also a bit, not just straightforward. Questions on performance, delays, and contractual obligations often require a deeper examination altogether. And for this, I think arbitration, as Mr. Rishabh Gandhi said, that these for contractual disputes, and even Dr. Misha Kumar said that the contractual disputes are very easy to be, and not easy, but rather correct way to be decided to arbitration, as there is flexibility, as there is a possibility of going ahead with the dispute in a proper manner. So there is much more comprehensive assessment of that dispute assessment altogether. So this is what we can see in guaranteed disputes. Now, when we move to insolvency, and particularly in IBC, now it is a well-known fact in judgments also that it has been emphasized that insolvency in general is not regarding individual recovery. It's a collective resolution altogether. Now, a party ideally should not be choosing insolvency with the hope of getting the whole amount recovered from the whole process. Because after the application by a financial creditor or even an operational creditor is accepted, after that the whole it becomes a collective resolution mechanism altogether, and the all stakeholders are taken into consideration, and a decision has to be taken after a COC meeting, and all these things require a time. So when a party is looking for recovery of its amount that has been lended, for example, a bank has given a loan to a corporate debtor. So if they are thinking about just recovering that, so I really think that the real opportunity lies before even an insolvency application can actually be filed. Because once insolvency is triggered, the valuation becomes a real concern, and flexibility there also thereafter reduces significantly. Whereas when parties are able to engage in a structured negotiations or mediation at a pre-insolvency stage, it leads to much better efficient outcomes and preserves the whole enterprise value. For example, if I can give you a case which actually happened in real life. I was appearing for the RP. Now it's a personal guarantor dispute between the parties. And wherein before the NCLT, the personal guarantor lost and the application was admitted under Section 100. Thereafter, after going to the NCLAT and after appealing and after the judgment was reserved, when the personal guarantor realized that there is no scope for any judgment in his favor, thereafter he went to the financial creditor and had a discussion about the settlement. Now, thereafter, they went ahead with filing an application. Both the parties went ahead and went file an application under Section Rule 11 of NCLAT rules to basically withdraw the matter as the matter was settled. Now, now the hindrance that occurred here is that post admission process, there are certain rules and regulations that are required to be followed. Now, as per the personal guarantor rules, and even if had it been a corporate debtor, then as per Section 12A, all these requires a proper COC approval. 90% COC requirement is there. So what I'm trying to say through this example, had this whole issue been discussed beforehand, before the whole insolvency proceedings would have started, this could have been resolved, and mediation was a proper mechanism to resolve that dispute. So that's where I say that I have a big supporter of having ADR or choosing ADR as a mechanism to resolve the disputes. Now, coming to fintech disputes, now we are as it has already been highlighted before, that this is a different kind of challenge. Now, these disputes are high in volume but low in individual value, and involves lot of digital platforms, instant lending, and automated decision making. So traditional dispute mechanisms like going to the court and having these kind of resolutions or grievance raising is not simply designed for this kind of matters. So this is where I think ODR, online dispute resolution, becomes critical. Now, as it has already been highlighted by Dr. Misha Kumar, that these actually becomes very actively driven space. ODR provides speed, it provides accessibility, it provides efficiency, and it is far better aligned with looking at these kind of transactions also. So, having said all these things, I really believe that ADR is not without its challenges also, because concerned around unequal bargaining power. Because many of these loan agreements, especially when I see, there are parties which are absolutely not aware of the clauses, because they are just wanting to have that loan account with them, have those funds infused with them at the earliest. So I think many of those times they are not aware of those rights. There are standard form of clauses provided by the lenders therein. And another part is procedural fairness. So ultimately, the objective in these disputes is not merely enforcement, but ensuring that value is not unnecessarily lost in the process. So having institutions like IIDRC becomes very important. They provide a structure, they can provide a mechanism or an assurance to the parties that there will be proper mechanism to support the same. Now, to conclude, ADR in banking and finance, I believe, is no longer an alternative, but it is also becoming integral to how parties are actually resolving the disputes. Now, they want a floor or a system that delivers resolution and not simply just judgments. So, and ending my opening statement, I can say that it is a sector where time and value are constantly at stake, and the shift is not just important; it becomes essential. So, that's how I would like to close my opening statement, and I look forward to other panel, Ms. Raveena, also to add to it. Thank you.
Thank you, Mr. Himanshu, for your opening remarks. Now, as we carry this conversation forward, it gives me great pleasure to introduce our next speaker, Ms. Raveena Rai. Ms. Raveena Rai is a counsel in the Disputes Practice Group at Khaitan and Co. in their Delhi NCR office and has an extensive experience in civil commercial litigation before the Supreme Court, High Courts, and various tribunals across India. Ms. Raveena is part of the insolvency litigation team and has been part of teams advising stakeholders, including lenders, promoters, hedge funds, sponsors, debtors in high stakes and complex insolvencies. She's been a part of several landmark cases before the Supreme Court, High Court, NCLAT, NCLT on the subject. May I now invite you to share your opening remarks? The floor is yours, please.
Thank you, Asad, and
Thank
thank
you.
you to my fellow panelists who have already shared deep insight on the topic, which is extremely relevant in today's scenario. And I wish a very good morning to everybody who's joined us. And now I have the very important task of summarizing what my fellow panelists have already talked about, and also present briefly my views on this topic. And I start speaking with the background and today's newspaper article, which says that the government is really looking to settle, withdraw about thousands of cases from courts which involve small penalties or small amounts. And we all know why that is happening. It's because of a pendency, lack of speed. Uh, People don't know. Visibility is an issue on the outcome of these matters. Um, and these are really disputes that can be resolved um, with the aid of alternative dispute resolution mechanisms. And I like to simplify whatever I study and practice in. And I start this with looking at the aim that we try to achieve with any dispute resolution mechanism. Uh, the aim that we try to achieve is resolution. And any dispute that arises and comes before any lawyer, um, the aim for the client, any stakeholder that we are advising, is ultimately how to best resolve this. If I can talk from my experience in general insolvency law, I would say that if a client today comes to me on advisory in insolvency law, I would suggest the first step to be an alternative dispute resolution mechanism before going ahead with uh, any litigation, precipitating it in terms of litigation. Again, like my fellow speakers have already talked about, insolvency is something that leads to all creditors coming in together, and it doesn't leave the person initiating the insolvency in control. The outcome is not in your control. So that is something that is going out as a practical advice. And when I see ADR, when I look at this term, I don't just limit it to arbitration and conciliation. I see that there is a lot of impetus that is being given to different kinds of ADR methods. And if I can just elaborate on that, if I see the new insolvency law amendment bill, I see that there is a creditor initiated insolvency which is being introduced. Before even initiating a court driven insolvency process, what is being emphasized is that the creditors should not make it a court process. They should try, with the management in control of the company, try to resolve this outside the formal insolvency structure by appointing a resolution professional just to aid this resolution. So that is something that we are repeatedly again and again witnessing. And the reason why we are witnessing that is that it leads to more resolution, which is the end goal. Um, Again, if we also look at the IBBI statistics, we see that people who actually file insolvencies, they don't see those insolvencies through. They, in fact, settle much before the admission order is passed. And that is reflective of the fact that insolvency proceedings are also being used, court proceedings are also being used as a method to settle outside court. These are proceedings that are not being taken in a litigation driven mindset. They're really being taken forward as a settlement driven mindset. Now, coming to the various stakeholders in financial and banking disputes, obviously, we've been interacting with a lot of financial institutions, promoters, investors who are different interest holders in such disputes. Their interests may not be the same, but ultimately, they all come down to one common aim, which is to resolve any complex dispute or issue that has arisen, be it on non-payment, be it on interest defaults, or the calculation of interest, be it on enforcement of security. And the aim is to look at the most efficient way of doing that. What we actually see is that there is also a very heavy regulatory driven impetus on adopting mechanisms that are outside courts to settle financial and banking disputes. So even if we see the RBI circulars that have been issued to lenders, the first step is not to go to court. The first step is not to file for recovery. It is really to classify that asset in various categories and then look at restructuring, look at all lenders coming together and deciding how to again restructure this loan. Think about how to get the company out of this mess instead of first going to litigation. So that reflects again that litigation remains the last resort as on date. Again, if we see, even in terms of investors, we are seeing that even SEBI, for that matter, is coming out with online dispute resolution guidelines, and those are reflective of the fact that investors are again and again not choosing to go to conventional courts and want to resolve issues outside court. Now, finally, coming to arbitrations and conciliations as a method of dispute resolution, which again we see happening in a lot of investor disputes. nationalized banks, financial institutions, which are really of they're driven by regulator. We don't see a lot of arbitrations panning out, but we see a lot of arbitrations being adopted by investors. And again, we see a lot of challenges because what we are seeing is that arbitrations are now panning out to be the same lengthy process that courts were dreaded to adopt. So that is something that practically we are seeing uh, people being driven out of our arbitration mindset, adopting other alternative dispute resolution forums methods to really resolve this. And I think uh, the way this space is evolving, it's important for everybody to see what is really working and adopt those mechanisms again and again. And uh, actually take out things that are not working. And that's something that we can see from even the insolvency regime, where pre-packaged insolvency resolution was something that was introduced as again, an alternative sort of thing for MSMEs. And when it was realized that it's not really working out, a new setup is being introduced. So my understanding is that ADR is something that is very party driven. Uh, and the stakeholders here, the lenders, promoters, and investors, are showing the way how to go about alternative dispute resolution in resolving disputes. So that's something that has been my experience, and I look forward to further discussions on this topic.
Thank you, Ms. Raveena. Uh, I do believe a transformation is underway with the government being in cognizance of the case pendency problems and ADR being pushed as a preferred dispute resolution mechanism. I believe somebody had recently said that it has gone from a last resort or an option that was seldom exercised to a mainstream option for dispute resolution. So, yeah, with this, now I would like to move on to the discussion. And I would like to begin by talking about the question of stakeholder expectations in financial dispute resolution. Now, lenders, promoters, and investors often approach disputes with different commercial objectives. They range from recovery and enforcement to value preservation and relationship management. Now, I understand that these points have been loosely dealt with by all the panelists, but since us lawyers love repeating, so at the cost of brevity, I would ask this, that given these varying priorities, do you believe that ADR mechanisms are better suited for certain stakeholders over others in financial disputes? Ms. Raveena Rai, I believe you could answer this for us and shed some clarity on this.
Thanks, Asad. I think this question is very relevant to extend what I've already spoken about, and identifying these stakeholders who are creditors, promoters, and investors. It's very important for us lawyers and people who are advising our clients to see where their interests really lie. Um, Again, when we look from a lender perspective, the aim is obviously recovery, finality, and early closure of any dispute that has happened. When we look from a promoter perspective, we see that they have a lot of reputational concerns, cross default concerns that may trigger from a particular default. And they also have management concerns, when it comes to securities being enforced, when it comes to company being taken into insolvency. So these are interplays that require very early resolution of any financial and banking dispute. And all stakeholders want these disputes to be resolved as early as possible. But what we do see is that, what, in terms of lenders, which are governed by regulatory frameworks, they have less leeway to adopt alternative dispute resolution mechanisms in terms of arbitrations, or conciliation for that matter, because they are governed heavily by the regulator. So they work in that framework and structure, and those are the parameters that they have to really take into account when they are entering into any financial transaction, contract, even building in alternate dispute resolution clauses into their agreements, the stages that they are really introducing in those agreements. Um, and obviously, speed efficiency remains a primary concern, but for promoters, when we look at the key driving factors, is the retention of control of the company and retention of any security that is that has been given in aid of any financial assistance. We see that such promoters really push for alternative dispute resolution mechanisms. We see borrowers who are unfamiliar with financial regulations, these uncharted territories, technical aspects. They would want an early resolution and discussions. They would want that an informal setup resolve their dispute rather than going into a formal setup. Um, Again, investors are looking for speedy and informal setup. So we see that they again drive arbitrations and alternate dispute resolution mechanisms through that channel, and it's equally beneficial for all stakeholders. So the interests may differ, but I would say that whatever method is being adopted by each of the stakeholder is driven by what is the purpose behind it and what are the aims that they are trying to achieve. So that is my understanding of the different um, uh, uh, results that each of the stakeholder is trying to achieve.
Thank you. Thank you. So, my incoming question will also be to you, Ms. Raveena. So, you spoke of recovery, finality, and early closures as being the top priorities. If we look at these three metrics, I believe we can, sum it up as the essence of any litigation strategy team. So, another important dimension is what ADR delivers most effectively in financial disputes. While speed is often seen as a key advantage, stakeholders are equally concerned about value maximization and enforceability of outcomes. Now, if you have the choice to prioritize which of these, speed, value maximization, or enforceability, uh, which of these do you think delivers, ADR delivers best in financial disputes?
So that's a very pertinent question. In fact, um, if, uh, so if I may just start by saying that you may not, you may aim for the stars, but you may only reach at some point, you have to curb your ambitions to that effect, and you may not get everything. So that is how any resolution is achieved, is by coming to a middle path. And any sort of resolution that is ultimately achieved will have some elements of speed, value maximization, and enforceability, but may also be wanting in some of these respects. So when we are going by, say, speed of resolution, sometimes it is a call that the creditors and the lenders take on cutting down on value and ensuring that the monies are recovered as quickly as possible. There are large haircuts that we see through the landscape of settlements, through the landscape of conciliations, arbitrations as well. Even after an arbitration award is passed, we see that considering the enforceability challenges and the time taken in enforcing awards, parties choose to cut down or take a haircut and ultimately settle at a lower value than the award value. So we've seen in practice that uh, parties are willing to compromise on one of the three parameters to quickly achieve resolution. And again, coming back to how I started, the aim is to resolve. So, it is seen that all parties weigh their options. uh, a good example would be the haircut that lenders take in insolvency settlements, and prefer to resolve things than stretching any insolvency or financial dispute forward. So that's where my understanding is that the three parameters really um, constitute a complete um, uh, they thrive towards resolution, and they may work out in different measures in each of the resolution solutions that a party may achieve.
Thank you. Thank you for your, insightful remarks on this. So, Mr. Rishabh, you've served on both sides, the bar and the bench. Now, as an arbitrator, as an counsel, how do you compare court litigation and arbitration handling complex financial disputes? And how do courts' interventionist tendencies impact confidence in arbitration? I understand, this is like a very broad-based question, and we could perhaps go on and on about it. But any clarity, any insights would be greatly appreciated on this.
Sure. So court's interventionist tendencies. Now this is little tricky and risky also, because I've written extensively and spoken about court interventions, and most judges may not agree with the view that I have. In fact, one of the senior advocates at the Supreme Court has written to me that my critical writing about it is borderline between criticism and contempt. So I need to be very careful while answering this question. Uh, Court intervention in arbitration is both necessary and dangerous. Uh, so necessary because arbitration cannot function in a legal vacuum, and dangerous on the other hand because the courts intervene too much at times. Arbitration starts looking like ordinary litigation in another form. So let's look at the basics. If we see the act, we can divide the intervention part into three categories. One, intervention before the arbitral tribunal commences arbitration, then intervention during the arbitration proceedings when it is going on, and then the last one is intervention after the award is passed. So if we just quickly run through the provisions, you have section 8 where reference can be made to arbitration by civil court when an application is made. Section 11, you have appointment of arbitrator. Section 9, interim measures can be given by the court. This is all fine. This is what is required and it's absolutely fine. Problem comes up later on. I'll go ahead. So initial part, before the arbitral tribunal commences arbitration, the intervention is fine. I don't have any comments on that. Intervention during arbitration also is important to some extent. If you have section 14, 15 for termination of mandate, for substitution. You have section 27, court assistance in evidence, which is rarely used by anyone. You have section 29A, extension of time for making the award, which is now available with the civil courts as well, not only the High Court. But in this, particularly section 14 and 15 are quite important. And out of my practice and my experience, let me give you just two quick examples about it. So I was handling one arbitration in Mumbai where the arbitrator was already during arbitration, the arbitrator had taken around 2 years for reaching the evidence stage. And unfortunately, the arbitrator got a malignant carcinoma, and the treatment was going on, aggressive treatments were going on. So the meetings were not held. We waited for around 1.5 years more. So already 3.5 years time we had invested into arbitration. The clients were patient enough. I convinced them that, okay, let's wait. Since the situation is this, that the arbitrator knows everything, we are at the evidence stage, it will be better to continue with the same arbitrator. But then the time came after 3.5 years time, almost 4 years. Then we felt that we should get a substitution done. And we had to approach Bombay High Court for substitution. This is one instance where intervention was necessary. Because we were writing again and again to the arbitrator stating that we should have at least a telephonic meeting if even video call is not possible. The physical meetings were out of the way because the treatment had many side effects and the arbitrator was reluctant to appear in person. So this is one part, one story. Another one in Delhi, I was dealing with one of the arbitrations. The arbitrator, unfortunately, was someone, a retired High Court judge, was more inclined towards speaking in regional language which was not known to me or my clients. And the arbitrator used to speak in that regional language with the opposite side, opposite lawyer, who was belonging to the same regional language and particular religion, etc. And we were absolutely unaware of that language. So we made an application, let's hold these proceedings only in English because we do not understand anything that you are talking with the other party, etc. But the arbitrator did not pay any heed to it. And eventually we had to go to the High Court. And in the High Court, we had to make an application for substitution of the arbitrator. So here the intervention was necessary. This intervention, so by that time, obviously the High Court, the arbitrator did not want any adverse orders or adverse kind of strictures. So that arbitrator recused. And then we got another arbitrator appointed. Then, in fact, the matter was referred to DIAC and it was continued and award was given. So in certain cases, the intervention is justified and important. It is required. Section 27, as I said, nobody explores it much, although it should be explored when it is necessary. The court's assistance should be taken while, if you want any specific evidence to be adduced, the court's assistance would be and intervention would be required. And 29A, extension of time. Now we have recent judgment, Chaugule's judgment, with which even the civil courts have the powers of intervention for extension of the time for making their award. So this is up till this, everything is fine. I have no problem with up till this. That as I said, there are 3 stages. One, intervention before the arbitration commences. One, intervention during the arbitration. That's absolutely fine. What I have some reservations about is intervention post award. You have section 34 where challenge to the award happens. You have section 36 where enforcement happens. And you have section 37 where limited appeals are there. And most critical is section 34. And section 34 being dragged up till the Supreme Court. We have seen a lot of cases. If we go through, and I'll discuss a little more about section 34. Considering these provisions, it becomes clear that it gives courts defined role at the stage of reference, at the stage of appointment, at the stage of interim measures under section 9, at the stage of challenge, enforcement, limited appeals, etc. So the structure of the law is not no intervention, it is limited intervention, and that's what the legislative intention or deliberation has been. And some interventions are plainly necessary, as I said. Courts are needed to ensure that a valid and neutral tribunal is continued. They are needed for urgent interim protection in appropriate cases. And they are also needed at the post-award stage because if an award suffers from serious legal defect, the law cannot treat arbitral finality as an absolute. So we are aware of DMRC's judgment where patent illegality was quoted and judicial correction was held necessary. So this judgment is again a reminder that court's review is not ornamental. It's if the award is fundamentally flawed, the court do have to step in. But at the same time, the concerns are otherwise reflected. Take up Justice K.V. Vishwanathan's dissent in Gayatri Balasamy. That is also equally important. I'm intentionally not referring to the majority judgment. I'm referring to just the dissent of Justice Vishwanathan. Now that dissent is powerful because it warns against expanding judicial powers over arbitral awards in a way that weakens finality and blurs the line between a challenge and an appeal. Because Section 34 is meant to be a challenge or application for setting aside an award. It's not an appeal. It's not a continuation of the suit otherwise, which is as per CPC. Once that line gets blurred, arbitration begins to lose one of its core advantages. So, to my mind, the real issue is not whether the courts should intervene. They must, at the right points, they must. The real issue is whether the intervention remains confined to what is necessary to preserve fairness, neutrality, and legality without allowing arbitration to lose its speed, autonomy, and finality. Now, that is something very important. And that is where confidence in arbitration really lies. Not in the complete absence of courts, but in a system where courts support arbitration without swallowing it. I'm trying to be careful with my words. The approach of late that we have had in India has been subjected to international criticism by many international arbitrators and many persons who are arbitrators. So I would, and just to sum up, uh, in certain cases where it is necessary, intervention is good. But when it is borderline, as I said, between that interventionism and crossing the line, the court should rethink and then pass a judgment. Yeah.
That's a very grounded and fair assessment that as long as the essence of arbitration is not compromised, intervention, can be welcomed and is almost like a necessary evil, if I may take the liberty of saying so. So, moving on to guarantee enforcement. Now, these disputes can lead to parallel proceedings and spreading across forums, creating inefficiencies and delays in resolutions. In your view, can ADR mechanisms help streamline guarantee enforcements, or do they risk adding another procedural layer to an already complex process? I would like to invite Mr. Himanshu to address this question, please.
Thank you, Asad. Uh, See, what I believe is that guarantee enforcement has actually results in parallel proceedings, as we have options such as civil recovery actions, we have arbitrations, we have insolvency proceedings, and sometimes I think parties, which I don't agree, but they also resort to even filing criminal proceedings altogether with with the intent of creating pressure to ensure that the amount is recovered or through a guarantor or through the principal borrower itself. Now, I think that this is actually embedded in our legal framework altogether. Now, for instance, there are few cases that I want to cite which are concerning insolvency. So, however, so in SBI versus Ramakrishnan, the Supreme Court actually made it very clear, and even the law in Section 14 clearly states that the moratorium under IBC doesn't extend to personal guarantors. This effectively allows creditors to simultaneously proceed against both the principal borrower and the guarantor, thereby legitimizing parallel proceedings. Now, this has also been stated in subsequent judgments also by Honorable Supreme Court in the case of ICICI Bank versus Era for Infrastructure, and even in VRS Ventures judgment, in which they have stated that the party, the lenders or especially the financial creditors, can initiate separate or simultaneous CIRP proceedings against both the principal debtor and the guarantor altogether. So taken together, all these decisions, what I can clearly see that the parallel proceedings are not an anomaly. but are legally sanctioned features of our current framework. Now, which brings us to the real question that we have asked here. If multiplicity is permitted, can ADR actually reduce it, or does it simply operate alongside it? Now, in my view, ADR can certainly streamline dispute, but only when it is used as a primary forum rather than an additional strategy by the parties or whichever party concerned. Now, if the arbitration agreement is well drafted, covering both borrower and guarantor, and allowing for joinder and consolidation of the guarantor and the principal borrower in the same proceedings, then it has the potential to bring the entire dispute into a single proceeding. Then this can also reduce fragmentation and avoid conflicting findings and lead to much more efficient solution resolution. Now, very recently, the Delhi High Court, I think, has actually supported this direction in the case of Intech Capital versus sorry, the other party, I'm not remembering. Absolutely apologize for it. But yes, in that case, they clearly stated. Now, coming to the facts of that case, the principal borrower and the lender had actually entered into an agreement in which the there was an arbitration clause here clearly stating that any resolution or any dispute within the parties shall be resolved through arbitration. Now, when the guarantor had entered an agreement with the lender, there was no arbitration clause as such. But at the very same time, when the lender was trying to make the guarantor as an essential party to the proceedings, the court clearly stated that these are the guarantors agreement and the borrower's agreement arise from the same cause of action. These are all consolidated proceedings altogether. And these are the guarantor himself or herself is a essential party to the whole proceedings, and accordingly was implicated as a party to the arbitration proceeding, despite there not being any arbitration agreement or not even being a signatory to the arbitration proceedings. So what I am trying to say is that such kind of judgments actually strengthen the case for drafting arbitration clauses that actually bring stakeholders within a single forum. Now, this is very restricted to arbitration itself that I am saying. Now, if we see the reality, the practice is actually a bit different, I believe. The creditors tend to pursue multiple remedies simultaneously to actually get things done, like arbitration for adjudication. They also initiate insolvency for creating pressure, and sometimes even criminal proceedings for legal recovery leverage. So at that time, in such cases, I think arbitration doesn't actually replace multiplicity, but it simply runs parallel to it. So it's mainly party driven and how the party's intention is to move ahead with the overall process. Now, therefore, the real issue in this question I see is that whether ADR, if ADR is effective in theory, but how it's actually deployed in practice. And therefore, I think it's part when we say ADR is party driven, this is what I see as an answer to this. And that's how guarantee enforcement can, decide how the question that you have asked. I think that's how it can be answered.
Uh, Thank you so much. I think, it really ties into what you had said earlier, that you as a lawyer make it a point to talk to the parties about having a scope for negotiation. I think this is what is required, a little bit of hand-holding by the lawyers or the advocates of the clients to help them manage expectations and, let their expectations be grounded. Otherwise, the proceedings can, go for a ride.
Definitely.
So,
Definitely. I
yeah,
agree with you at that, Asad. Just to add one more small point of it,
yeah, please.
I just believe that while advising, I think there are certain party expectations that are created. They just be the intention of course, the lender is to recover the money. The borrower is to ensure that a certain grace period or some kind of breathing space is there for it to, pay back those amounts. So in that part of time, I think not only arbitration as such, but I think mediation as such also helps you. And as I have stated earlier, I'm a supporter of mediation as such as a practice. Despite being a lawyer, I should be encouraging people to fight, people might say. But yeah, but this is how actually you can reduce legal proceedings altogether.
This to Dr. Misha. So, Dr. Misha, another critical aspect is the drafting of an arbitration clause. As we
Sorry,
have seen.
Asad, you are not audible. So sorry.
Oh, okay, okay. Just a second. Yeah, is this better? Yeah. So my question is to Dr. Misha. So, Dr. Misha, another critical aspect is the drafting of an arbitration clause in financial agreements, as we've been, repeatedly pondering over. And poorly drafted clauses can lead to jurisdictional and other procedural inefficiencies. From your experience, how critical is this drafting of arbitration clauses in financial agreements? And, I understand this is something that the panelists, including you, have pondered over and pressed upon. But if we could, through this question, get into a little more detail as to what should be, things to watch out for and to secure the rights of the parties, this would be greatly appreciated, especially with the, loan or shareholder agreements.
Thank you for that question. I think a very, very critical question. I'm sorry, there seems to be an echo.
Yeah,
Is
Mr.
that
Surendra, can you please mute yourself?
okay? Is it better now? Oh, I think there's still some echo. If you could just mute uh, where the echo is coming from.
Sure.
All right. So, since all the panelists have added such critical comments, I do want to first do a quick roundup of certain uh, comments that I would like to add. Uh, Miss Raveena spoke of how agency or the ultimate goal of resolution is important. So when we talk of agency, meaning that the parties are in control of the final resolution, especially in mediation, where we're looking at, the agency lies completely with the parties, where the mediator or the neutral is just a facilitator. So I think, yes, agency is one of the things, but it depends on what are the parties looking for. In cases of, let's say, home buyers, agency may not matter, or a quicker resolution may not be the goal for every party. They may feel vengeant, they may want justice. So when we talk of justice, the forum is courts. Justice delivery lies with the courts. When the final resolution aim for the party is something softer, then yes, ADR mechanisms come into play, which is not to say that those mechanisms are not as hard driven as courts. Um we see another comment was on pre-pack. Pre-pack was a resolution process that first came up in England. And when it was brought about, the resolution professionals on their own, outside the law, it's not part of their code, um, innovated this process. And it is present here in India in a very limited way. And like Ms. Rai, highlighted, it's not working very well. We have seen very few cases of pre-pack, but and it's limited to MSMEs. But what I mean to point out is that it is us, as even in the shoes of an adjudicator, resolution professionals, arbitrators, mediators, neutrals, judges, advocates. Mediation advocacy is a whole new field, and like Mr. Himanshu was saying, that us lawyers, we are, expected to litigate, expected to push, let the parties fight. We get eyes from senior counsels, law firms, that and certain partners who will say that, no, 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 why are you pushing for a mediation? The the fear is a fee. Let's get into the meat of it. So we need to incentivize mediation, we need to incentivize ODR. We cannot just sit in a void and say that, oh, let mediation multiply. And the push from the government and from the present CGI is a very welcome step. um, At the end of the day, courts are also delivering a service. We see now when we go around Bhagwan Das Road and Tilak Marg, there's a big board on how many cases were disposed of today, how many this past month. So, as a service, we are evolving. The justice delivery system is becoming so much more tech driven. We see now justice kiosks, telelaw to be able to file our cases. And and then we spoke about the ODR mechanism under SEBI. So all of these are welcome steps. But coming to the question that you asked me on, the starting point will be the clause. So in my view, financial agreements, in these agreements, the arbitration clause is never a boilerplate. It's a clause that determines whether the dispute will actually get resolved and proceed smoothly, or whether the parties will just spend the first few years fighting about what is the forum, where is this going to be enforced, which is the court which will have jurisdiction, where will the section 9 lie, where will we go for our interims. And Indian arbitration law has made this very clear. We all know about Balco and Booz Allen. And if I have to get into drafting of clauses, it's a whole 2 hour session on its own. So I am only going to focus on certain elements on shareholder dispute agreements and loan agreements. Now, in shareholder agreements, shareholding will be between people in a company, and the Bible of a company, the law that binds it, is their articles of association. So the arbitration clause or the dispute resolution clause is often not in consonance with and cannot be read harmoniously with the articles of association. Section 10 of the Companies Act. The memorandum and the articles bind the company and its members. So if the shareholder agreement contains transfer restrictions, deadlock mechanisms, veto rights, exit rights, and these are not properly reflected in the articles where corporate enforceability requires it, the arbitration clause may exist on paper, but enforcement becomes structurally unstable. And we have seen this principle getting reiterated in VB Rangaraja versus VB Gopalakrishnan. The second mistake is that the clause is drafted without reference to the actual capital and control architecture of the company. So, because the arbitration clause is not going to uh, operate in a vacuum or a void. It's not an abstract clause that we just write down. These are going to operate for real disputes. And these will arise out of authorized and paid up share capital, dilution, preemptory rights, affirmative voting rights, reserved matters, board nomination rights. So these are all of the rights that will either come before NCLT and sometimes under an arbitration. Uh, a generic clause saying all disputes shall be referred to arbitration often does not answer the real questions. Who constitutes the tribunal in a multi party dispute? Is the company itself a party? Can directors or affiliates be joined? Are the remedies truly contractual, or are they in substance statutory common law remedies? But at the same time, I do want to caution, especially from the comments from Mr. Himanshu, that we should not get into, especially during this discussion as well, we should be very cautious that it's not a court versus arbitration or a this versus that discussion. It's not just the stakeholders, it is the disputes that are arbitrable. So, the coming back to shareholder agreements, uh, this is why shareholder arbitrations often become jurisdictional or party structure battles. We have seen a number of arbitration matters going to Delhi High Court or other courts of the country, where group of companies doctrines have to be invoked, unveiling of the corporate whale, getting into who is going to be a party, who can be impleaded, who cannot. You will have a lender, borrower, and then the guarantor. Whether the guarantor can be then third party funding is a whole new chapter that's opening up. So the modern non-signatory and group structure jurisprudence, Cox and Kings, chloro controls matters over here because transaction documents in shareholder disputes are often spread across multiple entities. There will not be one entity in the group that will be affected. Um, a third and a very important error is failing to recognize the limits of arbitrability. Booz Allen does remain foundational. Actions in REM are generally non arbitrable, while the subordinate rights in personam may be arbitrable. And Vidyadrolya later brought about a more structured tests. I'm not going to get into the details of the case law, otherwise, we can spend all day here. But asking whether the dispute affects rights exercisable against the world at large, or whether it involves sovereign or public functions, whether it expressly or by necessary implication is reserved to a special forum, or whether the subject matter is inherently unsuitable for a private adjudication, these matter actually in finance because it directly has an impact on the economy, for the company's growth, for the growth of the country. And insolvency is the clearest example. Once the IBC process is admitted, the dispute is no longer merely inter-party, and it becomes collectively a credit facing and an in rem in effect. That is also broadly consistent with the logic of Section 41 of the Evidence Act, which treats judgments in insolvency and other status affecting jurisdictions as judgments relevant to the legal character. So when we talk about the limits of arbitrability, we are talking about different jurisdictions will have different rules. For example, in India, uh, copyrights, trademarks, and all intellectual property are considered actual property and in title. That's therefore a right in rem other than right except not a right in personam. Whereas in a country like Singapore or certain other jurisdictions, these are also arbitrable. So when drafting clauses, one has to be careful. One very, very important point on jurisdiction or on seat and venue, which we are still, even after so much clarity on judgments, we are still seeing is one, no unilateral appointments, as was initially pointed out by Mr. Gandhi. Two, the governing law of the contract and the governing law of the arbitration agreement are separate. It is now well recognized. The UK law has already now reiterated in its law as well. They have amended their law to say so. So we need to mention the seat. We need to when we mention the seat, let's say the seat is Germany, but the assets lie in France or in India for that matter. Then we need to sit with our clients. We need to sit with our parties, help them draft according to the instructions we receive. So I feel that as lawyers or as counsels or as draftsmen, we lack that communication. Because rightly so, these are known as sunset, midnight clauses, or champagne clauses. We're just about to pop the champagne and the deal is done. That's when these clauses get in loan agreements, for example, it's a no-brainer. We pick it up from an old contract and just transplant it and then try to customize it. And in that customization is where we lose certain details. And it's not just ticking all the boxes. Have we got the seat right? Have we got the language English? Have we got this? It's not just that. It is what is the client looking at. So we need to give them a real scenario that these are disputes that likely arise And at that time, it is difficult for them to foresee or understand that. So, but it is our right, it is our duty as counsels to explain that to them, that these are the issues that can arise in your agreements. These are how you can deal with them. These are your options, and this is how we can draft a clause. So that is why in a loan or shareholder agreement, one must ask a prior question before drafting expansively, that is the likely future dispute really contractual? Is it likely to spill into oppression mismanagement, rectification, insolvency, securities regulation, mortgage enforcement, public law territory? So, a broad clause, which we've all seen, may sound elegant, but if the remedy sought affects the legal status, third party rights, or certain statutory processes, that elegance will just can be deceptive. It may sound beautiful, it doesn't matter. What matters is the substantive meat behind it. In loan agreements, the mistakes are different. Um, as we've already understood, the most common is fragmentation across documents, multiple fora. That's why get involved for the same dispute. For oppression mismanagement, going back to shareholder agreements, I want to share an example. You will often see that asset freezing applications will sometimes lie with the courts, and sometimes arbitrators will simultaneously take those up. Um, competence does apply, but how it is unrolling in this country, it will take its own time. Um, while directors' disputes under 241, 242 before our company courts are absolutely arbitrable, and mediation is something that we need to start advocating. We need to start realizing that mediation is not just for small matrimonial um, or child custody matters, or it is not just for certain low value matters. High stake, complex commercial matters, technology matter, fintech matters are all can all be taken to mediation. And particularly in this country where companies and shareholders are usually part of the same family. So we do see structures in companies where uh, parents are on one side, the sons or the daughters are on the other side. We see shareholder disputes where the grandfather and the grandson is on one side, we see the father and the other son on the other side. These are complex matters where psychology, personal vengeance in family structures create or spell out as shareholder disputes, right? So, their mediation is a beautiful tool. We have seen it working. The reason it's not known well is because these are not court annexed mediations, these are usually private mediators. Everything happens hush hush, confidentiality is key, because these companies do not at the end of the day want to lose reputation, which has a direct and a you know absolute impact on their economic lifeline in the market. So there comes the stepped clauses, escalation clauses, where med or arb med structures, med arb structures or clauses are again welcome, but we are still not seeing that in our drafting. We really need to push that in India, because and this is a common complaint we are hearing from many jurisdictions. A lot of us are getting trained, a lot of us go to those classes, learn that, but we are not really incorporating it in our systems. And that will really save the buck. That will really save us a lot of time, because the moment a skilled mediator who knows that judging, even if the goal in that resolution between the parties of the settlement that they're going to arrive at is vengeance, is not the place of the mediator or the neutral to judge, will help ease the pressure, and um, it's just like a pressure cooker. The entire heat needs to be vented out, and mediation is exactly that. We need to savor these companies. We need to, and that is the whole goal of, even whether we go into insolvency processes, whether we go into company law, the the priority is keeping the company safe, keeping the financial structure, the labor, the working staff of that company, and as well as its assets, of course, um, from getting affected and getting out of hand. And which is why restructuring companies are doing so well in this country now. And in shareholder and loan agreements, the arbitration clauses has to be drafted in harmony with the articles, the capital structure, the security package, and the statutory forums that may be engaged later. Otherwise, the clause itself will become the first dispute. So, in my experience, and I'm sure all of us over here will agree to this, is that we are seeing an increasing number of satellite or sort of parallel litigation on just the seat, on just the jurisdiction of the arbitrator, on just securing that appointment first. We are spending years, we have Seagate was one big example where, we spent years just getting the Section 11 appointment. And that was because the clause was not clearly drafted. And in an anti-arbitral suit, the paying party, the party who had to the responding party, ended up filing an anti-arbitral suit in 5 different countries. We had matters from the US, we had judgments coming from the Singapore courts, we had 5 different jurisdictions, including India, involved. So to, you know prevent such a failure of the actual operation of the clause, the drafting is essential. And I do urge um, that a skilled drafting, with some training on what are the elements that need to be included. We all have those checklists, whether it's ICC, SIAC, how the clause needs to be structured. But what are the instructions that we need to get from our clients so that we can help them get to the resolution that they really want, instead of imposing our own draftsman language on them? Thank you.
Thank you. Thank you. This is the devil lies in the details, and you've done us a great, service by shedding light on all those details that become a pain point for the stakeholders at later stages when the disputes are escalated. So, thank you once again, Dr. Misha. Now, moving to insolvency. The formal insolvency process, while it is very structured and well articulated, doesn't necessarily always work to preserve value or business continuity. My question to Mr. Rishabh Gandhi is this: that do you see the scope of integrating mediation into insolvency proceedings? This is something that we have dabbled into loosely. The panelists have discussed mediation and pre-insolvency stages. And the IBBI also came out with the framework for incorporating mediation into insolvency. So my pointed query to you is that in your personal experiences, or drawing, experience from your personal experiences, have you encountered any specific instances where ADR or specifically mediation has helped preserve value more effectively as compared to that of, say, textbook CIRP process?
Yes, thanks, Asad. So answering the first part of your question first, yes, there is definitely scope for mediation in the insolvency space. The question, however, is whether it should be pre-admission stage, whether it should be during insolvency proceedings or resolution proceedings by halting the proceedings. And third, whether it should be concurrent. I'll deal with these three parts. But before that, I completely agree with Dr. Misha Kumar that we must advocate mediation, and it shouldn't be confined only to matrimonial or small cases. In high stakes cases also, in complex disputes also, mediation is possible, and I have seen it firsthand as a mediator as well as an advocate representing the parties in different cases. To my mind, mediation is a tool. It should be used where the facts justify it. Not every financially distressed business is a dead business. Sometimes the real problem is maybe stress, timing mismatch, documentation disputes, commercial deadlock, or simply breakdown of communication between the parties, and they have reached a breaking point where they're not communicating with each other. In such cases, mediation can create space for restructuring, for settlement, for inducting an investor maybe, and some other workable commercial solution. In the right case, that may preserve far more value than an immediate hard insolvency push. Definitely, yes, we should go for mediation. I have myself witnessed a mediation. This would answer your second part of the question regarding experience. Both this time, this experience is as an advocate representing one of the parties where I was a part of mediation process. Let me tell you, my client had not imagined that mediation would yield them the results that they got. Because we got OTS done, one-time settlement with the NBFC. The value of the OTS was so good for my clients. They had not imagined that they would settle it at this amount. And at the time when mediation started, but by the end they were very happy, and the NBFC was very happy. But again, while prescribing mediation in all the cases, I'll be careful. It shouldn't be over prescribing. Because it shouldn't become Ozempic of the legal world, where one side is just over prescribing it and other people are criticizing it for the side effects. Because I'm saying this consciously. We have got Commercial Courts Act. We've got compulsory mediation, mandatory mediation before initiation of the commercial suit. And you see practically in the courts, the cases are languishing in thousands. And in those cases, the mediation, they're stuck at mediation stage. And that stage of mediation is taking around 6 to 8 months time. And then somehow the matter is reaching the stage of admission. And if we compare the percentage and the data of actual result out of these mediations pre-admission, then I would say it has failed. And it has been subject to criticism. If you all have heard India's Prime Minister's economic advisor Sanjeev Sanyal in his criticism about Commercial Courts Act and mediation, how it has it has caused so much of pendency, then I have to somewhere rethink as a commercial lawyer, as an arbitration lawyer, whether uh, mediation should be pre-admission or it should be concurrent. When I say concurrent, I intentionally say that because you should not stop or halt the proceedings that are going on. Let it take its own pace. Let it go on. At the same time, parallelly, you can have mediation process. And in that mediation, if something good yields, well and good, you should close it. But if nothing yields out of it, then at least you have not wasted a good amount of time in mediation initially. Because I gave you an example of RERA also. They got CREDI in picture and it is taking 1 year just before admission. We got Commercial Courts Act and we got Mediation Act. And because of that, we are wasting 6 to 8 months for every commercial dispute. And it's not even 1% of the cases that are getting settled through mediation and commercial courts. Understand the severity of this. There are 99% cases languishing at mediation stage before the admission of a commercial suit. If you just compare the benefit and the ratio of risks or ratio of what are the disadvantages, then we have to be a little careful about it. So I would definitely agree there should be mediation, but it shouldn't be pre-admission. It should rather be concurrent. If we want to get mediation into insolvency practices before NCLT, then I would rather have it concurrent. And again, to my mind, the right approach is a discretionary and fact-sensitive one. So the member of the tribunal, NCLT, would understand whether there are elements of settlement, because that was the main test we have since very beginning. Section 89 of CPC has prescribed it since very long. Since long time, we are dealing with arbitration, conciliation, and mediation, where it is prescribed that when you have elements of settlement in a case, then you propose arbitration or mediation or conciliation. So that test should be applied by a judicial mind, and then it should be referred to mediation. And that mediation also should not be halting the proceedings. It should not be halting the entire case. It should rather be concurrent. There might be criticism that if you go from both the ways, if you continue with the litigation and also mediation, there are less chances of getting mediation succeeded. But you again need to weigh the risk and benefit analysis. And I would rather weigh in favor of concurrent rather than pre-admission. So to answer your question, whether in CIRP process, whether before NCLT and insolvency processes, should we introduce mediation? Definitely, yes, we should, but it should not be, in my personal opinion, at pre-admission stage, which is because of experiences that I've had and the community has had with commercial courts and RERA. Yeah.
Thank you for your insightful and practical guidelines and experiences. So, due to paucity of time, we will not be taking up the audience Q&A. With that, we move to the end of our panel discussion, and I would proceed to thank you once again to all the audiences and the panelists for sharing their valuable insights and expertise on ADR in banking and finance, loan defaults, guarantees, and all the related areas. Your thoughtful reflections provided our audience with a deeper appreciation of the complexities and opportunities in this field. May I now call upon Ms. Adri to tender the closing remarks?
Sure. So before we conclude, I would like to extend our sincere appreciation to our moderator and distinguished panelists for sharing their valuable insights. Your collective expertise in ADR and banking finance has made this session both insightful and impactful. We also thank all our participants for being an active part of today's discussion and contributing to the this knowledge sharing initiative. So e-certificates will be shared with all the registered attendees within 2 to 5 working days. So in order to be updated on our upcoming session under the AI series, we invite you to scan this QR code displayed on your screen. Our next session is scheduled for 2nd of May. We'll focus on ADR in energy sector, offtake agreements, pricing conflicts, and environmental obligation, a niche and increasingly relevant field. For any queries, please feel free to reach out us on the given contact details. Thank you once again for your time and participation. Thank you.
Idri, can I speak something?
Yes, sir.
You have time. Thank you.
Yeah.
My name is Surendra Kalra, Asad sir. I have also been into the financial sector now for the past 45 years. I've been doing a lot of dispute resolutions also in the banking sector. The topic should have been divided into three things: the domestic and international, banking and non-banking things. Now, we were trying to say that banks are in India governed by the regulations of Reserve Bank of India. And there is hardly any dispute resolution clause there. They go now Earlier, what Dr. Misha said that one-time settlement used to be there and something of that sort of is there, but it goes to NCLT now, where mediation is. I would certainly ask that lady. She is an expert in NCLT, but hardly any cases have been referred to mediation for the past almost 10 years. Nothing has come up. So ADR in NCLT is not at all picking up. Now, internationally, ADR has really picked up in the GCC countries. I have myself done lot many under the Sharia financing, lot of arbitrations and mediations. There is an arbitration clause. If you go to Manama Stock Exchange, we have not at all discussed about the commodity market and the stock market arbitrations and other things, which is also from the financial sector. If you go to Manama Stock Exchange, there is a product called Sukuk, which is interest-free bonds. More of Islamic sukuks are listed on Luxembourg Stock Exchange than on Manama Stock Exchange. Even London Stock Exchange is full of sukuks. There's a lot of arbitration going on there also. So those products are not at all coming to India. That is what my request is. If you go to these countries, we find a lot of arbitration taking place in the financial sector. In London, there is a arbitration institution called Prime Finance, which is only dealing with financial arbitrations. What we are discussing is the pros and cons of ADR separate and banking separate. We should try to convert these two into the Indian scenario, that how ADR can be brought into the banking and finance sector. If banking doesn't permit us, fine, RBI, we cannot regulate the regulator. Only thing is that in the other financial, like PE funds and others, they already have an ADR clause in their things. Like you rightly said, Dr. Misha, that in minority, this thing is not arbitrable in India. In Singapore, it is there. In Canada and Singapore, same person can be a mediator as well as an arbitrator. So he takes care of the entire process of dispute resolution without wasting any time. Whereas in India, the Mediation Act doesn't permit a mediator to be an arbitrator. So all those things as an institution like IIDRC, when we make a knowledge paper after this, we can suggest it to the government, send a knowledge paper or a white paper to the government, saying that these are the things which can be incorporated and we can borrow certain leads from the Gulf countries or UK, Luxembourg Stock Exchange, or London Stock Exchange like that. That is my request. I know the speakers are very learned. Rishabh has spoken very nicely about ADR, but he was totally missing about the convergence of banking and ADR. Dr. Misha said very.
We would
Yeah,
definitely take care of that.
your opinions and insights are very poignant, and we do believe these will be crucial in establishing India as a arbitration hub. So through any instrument that we can, we would be happy to take these up, and I believe folks at IIDRC will keep this in mind going forward. We really thank you for your insights, sir. Thank you so much.
The Qatar Financial Center is looking for financial arbitrators. They have very lot of scarcity of financial arbitrators. Qatar Financial Center.
Right, sir. Duly noted.
Thank you.
Thank you,
Thank
sir.
you.
Thank you, everyone.
Yeah. Thank you, everyone.